Hello guys and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the NASDAQ 100 futures chart. We're on the cusp of a brand new trading week. It's Sunday evening with the future markets opening in a few hours time, and of course tomorrow is Valentine's Day. So as of the 14th of February we have 5 brand new trading sessions on the horizon, and to be honest with you, quite frankly, I think it's going to be a very volatile week. We have Russia that could potentially invade Ukraine at any moment right now. We've been warned this by several governments across the globe, that being the US, the UK, New Zealand, German, French, etc., that there's a massive threat at this moment in time politically that Russia could invade the Ukraine, and that could be catastrophic for the stock market due to the fact that could cause the crude oil prices to rise significantly above $100 a barrel, increasing inflation. Federal Reserves will then have to act quickly to hike interest rates, and all in all, everything is very well correlated in the financial markets, and it would not be good for the stock market. And that's let alone even considering the bloodshed that would that would take place of the amount of deaths of Russian and both Ukrainian troops. So we do not want an invasion from Russia of any kind, and I really am praying and hoping that Putin takes his foot off the gas here with regards to sending troops, sending blood, sending missiles to the front line, to that border of Ukraine. But let's just talk about the NASDAQ 100 from more of a technical perspective going into this new trading week. Now, we all know that January was a horrible month, and from the highs we fell at the lows, down 18.3%. Currently speaking, we are down 14.85%. So we are still in correction territory. We're still in correction territory for the NASDAQ 100. But at this moment in time, we are looking like we're going to go and create a double bottom. So on Friday we had that horrible trading session where the NASDAQ ended down 3%, and I think on Friday I actually come out and said it looks to me that we are going to form that W pattern that I've been warning you guys about for some time now. I was very hopeful that we might just be looking at a V recovery here, especially when we broke above that 200-day EMA for the second time. But then once we got news from the Fed after that horrible inflation number on Thursday, and then, of course, on Friday, just to follow through, we had some really bad news with regards to the Russian and Ukrainian tensions, with the US government and the UK government announcing that they want all of their citizens to leave the country immediately within 48 hours because they might not be able to help them otherwise. So that, of course, meant that the NASDAQ 100 went to the weekly lows down at 14,300, and as I mentioned on Friday, it looks very, very likely that we will be targeting that 13,700 area. But that being said, if we are able to form a perfect W pattern here, that's actually quite bullish. And the reason being, I think I brought up this article here. For those who do not know what a W pattern is, on Google, here's a nice little phrase that I found for you all. The double bottom looks like the letter W. The W bottom pattern always follows a major or minor downtrend in a particular security and signals the reversal and the beginning of a potential uptrend. So let me just highlight this part of that sentence: the reversal and the beginning of a potential uptrend. And for those who don't know what the W pattern looks like when it's actually played out, it's kind of like this. You have your downtrend, and that was kind of represents the whole of January for us here for the NASDAQ 100, and then we've bounced back up. And this is where we were kind of trading when we broke above that 200-day EMA for that second time, roughly around this area here. And now, as of Thursday and Friday last week, it looks like we are on our way to go and form that double bottom. But as that previous sentence that I just showed you suggests, the W pattern is actually a sign that we are coming to the end of this downtrend. So I think ultimately the markets do bounce and we do break back above last week's swing highs, and then that will send us well on our way back towards those all-time highs and hopefully even higher. Now, I know that a lot of my YouTube viewers who watch my videos are retail traders, and the majority of you do trade with leverage, but there's also some of you who trade with non-leveraged accounts. And I've always made it clear that for those who are trading with leverage accounts, it's very important that you trade with a good risk management strategy. Don't be opening trades that are going to potentially blow up your whole account. And of course, if you're trading non-leveraged, it's completely different. It's a completely different way of looking at things. But I found a chart which I think is very important to show you all, and it kind of just it kind of it just informs you as to why it's so important to always be invested in the markets, even when there's political tensions like what we're seeing now with the Ukraine and Russia. This is a fantastic chart which goes all the way back to 1936, and it just shows you, we've had some terrible news events, terrible wars, etc., throughout the past century or so. But look at the overall performance of the US stock market. We've had like the likes of the terror attack of the 9/11. We've had SARS in there. We've had the Gulf War. We've had World War II. Even with these massive events taking place, the US market has always performed extremely well. And I think it's always important to know that the top 10%, the richest 10% of the world own 82% of the US equity market. So that's a very, very important figure to understand. And, this little bleep, even if Russia was to invade Ukraine, it would not be good for the markets at all. And I think that we would probably head a fair bit lower than where we are currently trading now. But it's important, it's very important to understand that you should still stay invested, because I showed you that other chart not so long ago that typically speaking, after the worst days in the market are typically the best days. So even if we did break below the 13,700 area, and let's say, we had a massive sharp pullback to, let's say, 12,000 or the 13,000 area. Well, typically speaking, from that chart, and history shows us that the best days come after the worst days. So if you were sold down here in a panic, and then let's say after the weekend on the Monday the markets bounced straight back up towards 13,900, well then you just lost a significant amount of ground. That's potential 10% move that you may have missed for the Nasdaq 100. So it's incredibly important to stay invested. I know times like this, especially going into this week, are very scary, are very worrying for investors, but it's very important to stay invested. Now, of course, if you're trading with leverage, it's slightly different because you don't want to get bought out. It's very important to trade with a stop loss and have that, have a very good risk management strategy in place. Going into the new trading week and going into any trade that you open, you should know how much you're wanting to risk maximum. Let's say if you've got a $1,000 account, you should be going into that new trading week, telling yourself that, okay, each trade I only really want to be risking $10 max, which obviously is 1% of your overall trading balance. So it's very important to have that trading risk management strategy in place. But I thought I'll just come on here this evening just to kind of show you that graph, kind of show you what I think is actually playing out here in the Nasdaq 100 and the other indices, is that we are ultimately going to be forming this W bottom, and I would not be shocked to see us trade all the way down towards that 13,700 area and go and test it. We may even dip below it ever so slightly, but ultimately I think we do rebound. We break above last week's swing highs, which of course is up near that 15,000 to 15,200 area, and then once we break above that, that opens up the doors towards 16,000. So I think going into the mid of 2022, or especially the latter ends, we will see the Nasdaq 100 trading at or above the all-time highs here. And one of the main reasons I still believe that we've still got higher to go, and don't get me wrong, we've had a fantastic rally here for the Nasdaq 100 over the past 18 months or so. But if I just show you with the fib retracement chart, so obviously we had that low in March. So if I just pin it back to that 2020 March low, the 4.23, so the full extension here for the Fibonacci takes us all the way up towards 20,000. So we've recently broken below that 2.61 fib level, but if we break above there, and that's where that 15,000 area is, so if we can break above that 15,000 area, and again that's kind of an area which has been offering resistance the past couple of weeks. If we can break above that, that opens up the doors towards 18,000. Now, of course, we don't have to go straight towards 18,000 this year. We could slowly, but even if we had a nice move, let's say up towards 17,000, that of course from the beginning of the year represents a nice single-digit gain of around 4 to 5%, and I think that's quite modest. That's quite a nice gain for the Nasdaq 100 going into the end of 2022, especially considering the Fed's actions with hiking interest rates, the easing of quantitative easing, etc. So I think that the Nasdaq 100 has got a lot higher to go, and although it may be very volatile this week, we will ultimately break back above those all-time highs and trade up towards the likes of 18,000, eventually the full extension 20,000 in a few years to come. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.